Welcome back. The bull run is underway, and Peter Thiel-backed entities are acquiring 9.1% in new Ethereum treasury companies. The race is on to hoard and acquire as much Bitcoin and Ethereum as possible. And this amongst many people waiting and holding out for the altcoins. But as I explain on a regular basis, we need to trade the market in front of us, not the market we want. Whether we're going to have an altcoin season or not, I don't know. But there is a lot going on in the markets, right? We have Wells Fargo and the banks just across the board not doing too well. Wells Fargo borrowed $188 billion last quarter. This is a sign of desperation, according to the Coastal Journal. They don't have the money. And of course, you should be asking the question, like, why is a bank borrowing money if they're doing well? And by the way, the stock in Wells Fargo is at all-time record highs. The banks across the board are up. I mean, you could see right down here on the 5-year chart. Let's just pull up the 1-year chart. You pull up the 5-year chart. Bank of America is up almost 100%. Citigroup is up 76%. JP Morgan is up almost 200%. And what I remind my viewers is just a few months ago, the CEO of JP Morgan Chase, he sold like 150 or $250 million worth of his stock. And so what do we know is going on? We know that there is a transition from TradFi, traditional finance, into DeFi. And it seems like things are accelerating. In today's video, we're going to be exploring this. We're going to be talking about the Federal Reserve Chairman possibly getting fired by the president. We're going to talk about Ethereum and the banks, Internet Computer Protocol, Bitcoin, and much, much more. So make sure you guys are subscribed to the channel. Give the video a free thumbs up. We upload every single day of the year to bring you the latest happening in the financial world. Thumbs up are free. Crypto is not. Now, going along with where the banks are, right? Because again, JP Morgan, huge moves, Wells Fargo borrowing $200 billion. I mean, think about that. If they don't have the money now, where are they going to get the money in the future? Which means they're going to have to borrow even more money. Where are they going to find this money to buy? Well, it's something that we're going to have to keep an eye on over here in the banking ecosystem. But remember, if the banks start to not do well, what does this mean for crypto? More specifically, the decentralized finance space, and even more particular, Ethereum. And so we're going to be talking a lot about Ethereum a little bit later in the video because, you know, we are seeing a lot going on with Ethereum. And I think that the play has moved from Bitcoin to Ethereum. There is still obviously a Bitcoin play here, but I think from a percentage gain standpoint, and I would have probably imagine many of you would agree that we're probably going to see more percentage gains, at least in the short term, from Ethereum than we will for Bitcoin. But the banks are not just stopping there. Now, if you guys remember, at the beginning of June, I posted this video called Citibank Eyes ICP. And if you haven't seen it, I would definitely recommend watching this video. In this video, I showed you that at the World Computer Summit at the beginning of June, where Internet Computers DFINITY, which is the foundation behind, or the company behind Internet Computers development, they had the World Computer Summit where they revealed, you know, Caffeine AI, which is an AI capability to code and then deploy dApps on chain. But at that conference, the DFINITY team actually interviewed somebody who worked at Citibank, and I posted that on my on this video on this channel, and people were like, "No, Cryptoviser, he was just there in his personal capacity. There's no way that Citibank is going to send somebody to the World Computer Summit." Well. That once again, Cryptoviser appears to be correct once again. $2 trillion Citibank says that they're going to be an on-ramp for the Bitcoin and crypto industry, with their chief financial officer stating clients want to be multi-border and multi-assets. Let's listen to exactly what he said. And again, I would definitely recommend watching this video called Citibank Eyes ICP. If you haven't already done it, just go to my YouTube page and just type in Citibank, or just type in Citibank, the Cryptoviser, right here on YouTube, and you should be able to find that video fairly quickly. But now is the update to that video, and let's listen and watch.
Back and you think about Citi, and you think about our treasury and trade solutions business, we're in over 90 countries with clients. We have an expansive network that enables our clients to manage their liquidity, manage their payments, manage financings and vendors, et cetera, et cetera.
Yeah.
What clients really want is the ability to be multi-border, multi-asset, and be able to do these things 24/7
And it
all the
sounds
time.
like a stable coin
And our
makes
token
sense for that.
services business, our city token services business, enables our clients to do those things, and we're continuing to invest in that. Where stablecoin comes in is with this Genius Act. I think it creates an opportunity for us to be able to serve people who will be issuing stable coins and to have an option for those clients that we serve today.
Yeah,
whether it be
certainly.
reserving, whether it be on and off ramping, conversion from coin to cash, those are services we'll be able to provide. So we view that as an opportunity for us, but we feel very good about the competitive advantage we have with our network and with our city token services.
Absolutely.
And one of the things that I would say here is the banks have been involved, right? A lot of people in crypto believe that, like, oh, the banks are just coming around. No, no, no. Guys, the banks have been involved for a very long time. Even John Deaton, a very well-known crypto advocate and lawyer, he said JP Morgan was involved in Ethereum from the beginning, never listened to what a lying mouthpiece like Jamie Dimon says. And this is in response to a video where Jim Cramer is saying Jamie Dimon will go all in on crypto. Let's listen to what Jim Cramer says. And obviously, we know the Jim Cramer effect, right? Or the inverse Cramer effect, but let's listen to what he says.
You had Tom Lee on recently, and David Faber was quite familiar with the structure. And there are a lot of people who are approaching other people who have name brands and saying, look, we ought to get in this business. We can go borrow money and buy Bitcoin and make money.
Or Ethereum, right?
Yeah, or Ethereum. Yeah, Ethereum. I used to own Ethereum. Wow, I mean, that thing was a rocket ship. Then it kind of died out. But people were actually using Ethereum to buy things. But I think there's a whole other world out there right now. And like Jamie Dimon today about private equity, he criticized. I mean, I don't know. You know how there are these sites, the site that talks about what events are going to occur. I'd like to go. I'd like to be the bookie on when he does a lot of crypto. He'll go all in crypto. Maybe
He's talking about Polymarket.
But I think
that would be a true 180.
Yeah. Well, I think that's why you got to check the sites.
Either Polymarket or Kalshi. But here's the deal, guys. We've covered this on this channel for years. I mean, I think the videos are still out. I think I had a video called "The Banks Control Ethereum" or something like that. But again, some of these videos may be privatized. But anyway, the point here is that yes, JP Morgan has been involved in crypto for years. Most of the banks have been in some capacity. But literally, Jamie Dimon would come out, the CEO of JP Morgan Chase, and say, oh no, crypto's scam, crypto's fake, crypto's this, crypto's that. Meanwhile, I remind you, he has been selling hundreds of millions of dollars worth of shares over the last year. And why do you think that is? Well, if we are seeing the transition to DeFi, we know the banks are involved in some capacity. Like, for instance, JP Morgan was one of the main funders of Consensus, which is the main developer of Ethereum and MetaMask. So anything that JP Morgan wanted to be implemented there, they got. Why? Because they were one of the major funders of Consensus, which effectively is Ethereum. And they've already tested on Ethereum multiple times. They've used it multiple times. By the way, they've created their own blockchain that they ended up gifting, like quite literally gifting to Consensus, and then they created another blockchain. Now they have a JPM coin. And so correct, JP Morgan has already been involved. They are slowing down everything because they want the institutions, aka the banks, to control it all. The banks control the markets, the banks control the money, the banks control the world. And so if we're transitioning into decentralized finance, which is underway, and forget about the US, the majority of the world is moving in this direction. The banks know. The banks know. Their business model it's not going away. Like, people think that banks are just going to shut down. It's not going to happen. It's going to be a very slow decline, right? Where some banks may fail, other banks will, acquire those banks and save them. And then these banks are going to be, effectively the institutions, the only few banks that are left. Because how are they making money? Banks really only make money off of debt these days. And, crypto is anti-debt. It's the opposite of debt. Whether it's going to catch on or not, I don't know. But this is why the banks FUD it. They FUD crypto because they don't want people involved, or they want it to be very, very slow. And that brings us to where we are in the cycle, right? This guy, who is a retired game developer on X, said, I want to debunk the myth that retail Bitcoin investors are ever going to come back. And this is something we've been talking about on this channel and kind of where we are in the cycle. This guy said, I keep seeing people ask, when will retail wake up to this Bitcoin bull run? But they're missing the point. Retail isn't coming back. It's been priced out at roughly $120,000 per coin. Owning a whole Bitcoin is beyond most budgets, and the chance to scoop up one at $10 or $100 is long gone. And again, this is the point, right? If you think about this cycle, what has dominated this cycle? Wall Street. They are taking over. Even the Bitcoin maximalists can't see this, which is pretty incredible. That the institutions, Wall Street, are taking over everything, right? They've taken over Bitcoin mining. They've taken over the infrastructure plays. And now they're taking over the actual coins themselves, right? You can still buy a coin, but how many people think about it? If you went to an average person, friend, family, neighbor, coworker, whatever, and you're like, hey, what do you think about Bitcoin at $120,000? They can't even fathom this, right? They can't even fathom it because most of these people are not even making $120,000 a year. They've never seen $120,000 in their accounts. And so we have to understand, like, we're at a point where Bitcoin, while it is, I believe, going to continue to go up over time, scarce asset, all of this, for the everyday person, they cannot see the possibility, right? And so this is why they're creating all these other products, because if you create a Bitcoin ETF, right, they can keep splitting the shares of the ETF to make it less expensive. And so although Bitcoin price hasn't changed, people will still invest in a Bitcoin ETF at $20, $30, $40 because they see that as a way, as I can afford it. Even though you could tell somebody you can buy a portion of a Bitcoin, they're still probably going to go for the cheaper option. We've seen this. It's just kind of market psychology, especially for people who are not involved in the markets and don't really know anything about money. If you said to somebody, well, Bitcoin's $120,000, it doesn't even cross their mind, oh, shit, I should buy, right? And anybody who is telling or advising somebody who knows nothing about crypto, nothing about money, and doesn't even have $120,000 to invest even $1,000 in this. This is wildly, not right, because these people are going to lose their money, right? They don't understand the longer term effect of it. And so, yes, I agree. Retail has been priced out. And I kind of think that this was Wall Street's plan, right? Let's price out the average person, and then we can come in and we can buy it all. And so, I mean, it's kind of the opposite of what Bitcoin was created for, but it is what it is. Anyway, he continues saying, retail demand was always fueled by stories of tiny stakes turning into fortunes. Bingo. That era is over. Even if Bitcoin hits $1 million, that's only 8x from here. So a $1,000 buy, and that's $8,000. Nice, but hardly life-changing. No wonder small investors are chasing meme coins and altcoins, hoping to double in weeks instead of years. And this is 100% true. This is what we've been talking about, right? This is why I said on my previous videos, and we're going to be talking about this a little bit later in the video about Ethereum and the Ethereum treasury companies, is, I said to my viewers, like, the minute they announce, any company announces, we're buying Ethereum, we're putting it on our balance sheet, buy the stock. Like, not a financial advice. I'm just telling you my thesis on it. You buy the stock, wait for it to go up 50, 60%, and you sell. And it could go up higher than that. But remember, most people are not even going to be buying, right? And so that is the way that why retail isn't here. Because even $3,000 is a lot, right? I mean, banks are having to borrow money. What do you think the average person is doing? They're borrowing money also. Continuing on, he said true retail adoption won't come from spot exchanges. It will arrive when 401ks, retirement accounts, and index funds allocate to Bitcoin. That shift is already underway. Corporations, hedge funds, and governments are stacking Satoshis. Main Street will tag along through their planned sponsors. For those of us who got in early and held, there's still more upside ahead. But don't expect a flood of new retail buyers on Coinbase anytime soon. And I would agree. I would agree. Right now, it's all about Wall Street. And so, again, we have to trade the market in front of us, not the market we want. Everybody wants altcoin season, whether it's going to happen or not. I don't know, and you don't know. But betting on that, when that's not where the market is, not the market in front of us is showing us. We went from Bitcoin treasury companies making major moves, right? MicroStrategy, that play is over now. It's over. And we're about to talk about MicroStrategy, but that play is over. Ethereum, that play is beginning. Will it move into other coins after that? Potentially. But we have to also understand what else is going on with the banks, because this is critical. If you guys don't know, Palte, who is the U.S. Director of Federal Housing, he also owns I think a development company. He is going in on Jerome Powell. By the time you're watching this video, Jerome Powell may be fired or resign, but he is going in, and he is one of the most effective communicators that I've seen about this situation, kind of pushing Jerome Powell out the door, because Powell does not want to lower rates. And granted, people are going to say, but he's not the only decision maker. No, but he has a lot of influence. And I think what they're looking at, right, the president, some economists, they're looking at not only that the average American is priced out of this, right, but why are they priced out of this? It's not just this that they're priced out of. People are priced out of cars. People are priced out of homes. People are priced out of rentals. Some people are even priced out of just buying food. This is very important to understand, because they're talking about all these jobs, but a lot of the jobs that they're talking about bringing here is a lot of manufacturing, right? Low pay jobs. And it goes back to the tweet that I showed you guys a few weeks ago or days ago that said, there's a whole generation that are studying for jobs that are not going to exist. And that's literally what's going on. It's underway. People are investing in assets that are going to zero, right? And so what is the solution, right? Is it lowering rates? Well, lowering rates is definitely going to stimulate the economy, but obviously lowering rates has side effects, which is inflation potentially, people getting very wealthy while other people continue to stay poor because they're not investing in assets that go up. And so there are side effects to it. But Palte said Jerome Powell is 72 years old, wealthy, and doesn't need a mortgage, doesn't need a credit card, doesn't need a car loan, and he doesn't like our great president. That's why he won't lower interest rates, and why he will go down as the worst chairman of the Federal Reserve in history. He also responded to this screenshot. It says, Palte says, confident Powell is going to resign. And he said, I am confident, right? But then we got this interview. This is actually really funny because Powell's like, you guys can't fire me. And they're like, no, we're going to fire you. And then he's like, no, you don't have any just cause to fire me. And then they're like, well, you just spent $2.5 billion on a building renovation for the Federal Reserve. Like, think about $2.5 billion. There's like chain stores in America that make less than $2.5 billion, and they have stores in every state. $2.5 billion is a lot of money. Most people will never see that. And honestly, to build a brand new building probably doesn't even cost $2.5 billion. So how does renovating a building cost $2.5 billion? But it seems like this is kind of the route they're going to kind of say, Powell, either you resign or we're going to fire you for this. Let's listen to what Palte said. And by the way, remember, Palte is in charge of housing in the U.S., so he knows like what it costs to build, even if you're, using very expensive materials and labor and all of that, right? So let's listen to what he says. And again, this is the setup for Jerome Powell to get out. And if he gets out or gets pressure to lower rates, what is happening in the market? I think you guys know. Let's listen in.
Are you calling for an audit to happen on the renovations?
There needs to be an audit on the renovations at the Federal Reserve. I think people need to in a bipartisan fashion, call for an audit. We have $2.5 billion. Who spends $2.5 billion on a renovation? I mean, I couldn't even think about how to do that. I mean, you know how many movie theaters you'd have to put in it, and all kinds of spas and pools and hot tubs and everything? I mean, you'd have to really come up with some crazy stuff to spend $2.5 billion. So it smells to high heaven, and I think Jerome Powell's going to resign. And if he doesn't, I think there's enough there for cause to terminate him.
So listen, I don't know whether he's going to be terminated or not. I mean, his like term as chairman ends in May, so we're less than 1 year away from that. So this could be prolonged, or they're going to fire him, nominate somebody else, and then there'll be a fight back and forth about whether that person gets confirmed or not. But this is setting up for the market to pump. Polte said, as I stated, I believe there's strong legal basis to terminate Jerome Powell, and for cause. Jerome Powell is a bad guy. What he has done with the building is a great stain on America, and he's destroyed the independence of the Federal Reserve. Jerome Powell's career is done. Powell's got to go home. And so we'll see what happens with this. But again, if Powell does get terminated, the market is going to price in massive rate cuts. And whoever goes in as the chairman next is probably going to cut rates. And so in the short term, that could be bearish. But in the medium term, it's going to be bullish. And this could potentially be putting us into 2026 for the massive, massive bull run. Or it could put us at the end of 2025 with a massive bull run. I don't know. But remember, whenever we have a massive bull run to the upside, we're going to have a correction to the downside. And meanwhile, we have 21 shares saying Bitcoin is increasingly likely to see a prolonged correction. Unlikely, by the way. So they don't think that Bitcoin is going down in price. And this is possible. They said the structural imbalance between surging demand and a rapidly vanishing supply base makes a prolonged correction increasingly unlikely. There are far more positives than negatives right now. On the supply side, the fundamentals remain even more skewed. Bitwise, head of research, pointed out that the lack of Google searches in interest for the term Bitcoin could indicate a lack of interest by retail investors. Bitcoin is at new all-time highs, but retail is almost nowhere to be found. And that goes back to the other tweet that we were talking about. Retail is priced out, and retail is not coming back. And I also think that a lot of people are not taking into account what happened in the previous cycle, that people don't trust crypto, especially at all-time record highs, because of the FTX, Voyager, Celsius, 3 Hours Capital, BlockFi, all these companies collapsing and people losing their money last cycle. They may have gotten it back, but they don't trust the market. And I think the Bitcoin play is kind of weakening. And they're saying we're not going to have a prolonged correction. We may not, but we're going to have a correction. Anybody who's telling you different literally doesn't know what the hell they're talking about. There will be a correction. There will be a bear market at some point. And by the way, a lot of this has to do with this. Cantor Fitzgerald plans $3.5 billion Bitcoin buy from Adam Back's Blockstream. So Cantor Fitzgerald is nearing a big Bitcoin acquisition through a SPAC merger, targeting 30,000 Bitcoin from Blockstream Capital. Now, a lot of people would say, well, this is very bullish, but is it really? I don't believe it is. So Cantor Equity Partners won a blank check special SPAC company that raised $200 million in January, and Blockstream, a crypto trading firm, is where this deal comes from. Blockstream would reportedly contribute as much as 30,000 Bitcoin, about $3.5 billion, in exchange for shares in this equity vehicle, in this stock, which would be renamed BSTR Holdings. From my understanding, this is different than 21, which is Cantor Equity Partners' other SPAC, and Jack Mahler's company. But I want you guys to think about this, right? This is actually just a wealth transfer underway, which pretty much any bull market is. It's a wealth transfer, right? From people who are selling to people who are buying, right? You're buying something and selling your dollars, and they're taking the dollars and selling the coins. This is a major issue in this cycle because as we've seen, MicroStrategy keeps buying and buying and buying. Then we hear about all these other Bitcoin treasury companies buying and buying and buying. But meanwhile, the price of Bitcoin is barely moving. And the reason it's barely moving is because they're not buying the Bitcoin from you. They're not buying the Bitcoin from me. They're buying the Bitcoin from other whales. So they go to the whales like Adam Back and say, listen, you have, 40,000 Bitcoin or whatever it is, 30,000 Bitcoin. You want the cash or are you going to hold the Bitcoin? Now, a lot of people in the crypto space will say, no, you should just hold the Bitcoin. But here's the deal. They want to realize their gains. And the dollar is not going away. It may lose value over time, but it's not going away, period. Most people think, oh no, I'm going to hold the Bitcoin. Guys, if he has 30,000 Bitcoin, believe he has more. And so he could have another 30,000 Bitcoin. So cashing out $3.5 billion worth and then still having 30,000 Bitcoin, it's a pretty good deal. But this is happening across the board with most of these Bitcoin treasury companies, which means these are basically off-chain or off-exchange transactions. This is just private sales. And so private sales don't really affect the price on the market because they may actually not be paying spot prices for this, right? They may say, well, spot price is 119,000, but if you sell 30,000 Bitcoin in the market, we're going down to $50,000. So we'll buy this from you, but we want a discount. So maybe they'll get it for $110,000. Whatever they do, doesn't matter. It's not actually affecting the markets or the supply demand in the markets. And personally, I don't think that these Bitcoin treasury companies would be buying the Bitcoin if they had to buy it on the open market. That's why I think the price hasn't really moved yet. Listen, MicroStrategy keeps saying they're going to keep buying and buying and buying and buying. But we also know that Michael Saylor doesn't want us knowing where the Bitcoin is coming from. Why? I don't know. He won't show us proof of reserves, won't show us wallets, and specifically has said that he doesn't mind top-level wallet, like total balance, but he doesn't want the underlying Bitcoin transfers that have occurred to be made public, which is odd. Like, why? Well, I think it's because they're buying it from the Bitcoin mining companies, from the billionaires, from the whales, and the whales are taking it. They're taking the exit liquidity. That is what this is all about. It's about buying low, selling high. There's no other reason to invest. These people who make you think like, oh no, we're investing because this is changing the world. It's like, okay, you could change the world and still make money, right? There's no reason that somebody's investing to not make a profit. And anybody who tells you that, literally just ignore what they say moving forward because they're lying. Nobody's buying Bitcoin just because they love it. No, even a hedge against inflation, a hedge against the dollar going down, it all comes back to making a gain and staying ahead. Well, staying ahead, if you got 30,000 Bitcoin basically for free and now you're selling it for $3.5 billion, it's a pretty good deal, right? But again, these people have been holding for very, very long times. I personally don't think that we're going to see these type of returns ever again. Potentially in most of the cryptos. Newer cryptos, obviously, just the demand in itself. This is why I say, like, when a company is announcing an Ethereum treasury strategy over the next few months, you have to get in immediately, like within a day. Otherwise, the price is going to reflect what they're doing. And meanwhile, Michael Saylor, Bitcoin holdings has swelled to over 70,000 Bitcoin, right? They have over 600,000 Bitcoin. So what? They're buying Bitcoin. So what? They've been buying Bitcoin and the price is barely moving. And so what catalyst do you think is going to occur that's going to push us to $1 million this cycle? Because it's not me buying and it's not you buying and it's not your friend buying, okay? And that's, I think, the big disconnect this cycle because retail, quote unquote retail, or investors that have been in since the previous cycle or the cycle before that, they're all waiting. They're like, wait, this coin that I had last cycle, I'm going to be able to get out, right? Cardano, we're going to be able to get out. It's going to $10. No, it's not. No, it's not. People will say, oh, well, Sui is going to get to $40. I mean, it's possible, but it's very unlikely because yes, retail is more likely to buy a $4 crypto or 75-cent crypto than $120,000 crypto. But the bottom line is that the factor in the market that is pushing the prices higher is institutional buying. And that brings us to what Jim Chanos is saying, right? Short seller Jim Chanos goes head to head with Bitcoin evangelists on MicroStrategy's premium. And you guys know, we've talked about this before, that their share price, you can see it right on their website. They don't even hide it. Their MNAV is 1.94, meaning the share price, $453 when I'm recording this, is almost double what their underlying Bitcoin is, right? So their Bitcoin market cap is $71 billion, and the stock market cap is $126 billion. So they're overpriced by almost double. And Jim Chanos has been talking about this for quite a while. And so, basically, the CEO of Bitcoin Bond Company went head to head with Chanos. Chanos said there are reportedly 143 companies playing the same game. The topic contention was the premium, right? What we just talked about, where you're actually paying double what the NAV is. This will correct at some point. And that's what Jim Chanos is counting on. They can keep buying Bitcoin, but the price of the stock is not going to go higher. It may go a little bit higher, but it cannot go higher because the NAV is what the underlying assets are. There's such a big disconnect. And so when you're playing a game where MicroStrategy was the only one, they could still do that. It's the same thing with Grayscale. Grayscale used to have a premium or discounts to the NAV, and you could arbitrage trade that. But now, because there's so many ETFs that don't have that arbitrage, nobody's playing the Grayscale trade anymore. And so MicroStrategy, the trade there was we're going to have an overvalued stock, but now it's overvalued and nobody's interested in it. I mean, who are the people who are buying MicroStrategy recently? It's basically mostly Wall Street, and they're just buying it because they want a stake in it. They don't care about where the price goes. They just want to have a stake in it, right? And so the heart of Jim Chanos' argument is that strategy offers nothing to merit the premium. The premium should contract over time as the Bitcoin treasury companies like Mara Holdings, Riot Platforms, Metaplanet have established copycat shops operating near identical business models. Chanos dismissed the case for a premium presented by Michael Saylor as financial gibberish and claims Saylor doesn't fully understand the implications of the convertible debt and preferred shares his company has issued. So that's kind of where we are. They keep buying, but now the short sellers are coming in, and they will push that price down. It's just a matter of when. There's a lot of Bitcoin maxis and MicroStrategy maxis that are going to say, well, Jim Chanos is going to get liquidated. And it's like, you guys don't understand what kind of money you're playing with, because you're playing with money that you can afford to lose. Or maybe can't afford to lose, I should say. In MicroStrategy, Chanos, he's been doing this for years. And so his position is probably very small, but on the upside, it can be very big. And I think it's something to keep in mind. We're also seeing Riot Platforms, by the way. They are slowly backing out of Bitfarms, right? And so some people would say this is a negative, right? Last year, Riot Platforms bought something like 20% of Bitfarms, the company, because they wanted to acquire the company. Bitfarms said, no, we don't want to be acquired. We're not going to sell to you. Riot Platforms bought these shares at around $2 or $2.50, something like that. And now the Bitfarms shares are around $1. So they've already taken massive losses on it. But this is a bigger indicator for me that they're lowering their shareholdings in Bitfarms because they realize they're not going to be able to acquire Bitfarms. And so this is actually a negative for Riot and a positive for Bitfarms. Because to me, it says that the Bitfarms business model and what they've kind of restructured the company and the focus of the company over the last year or so, it tells me that it's clearly working, and Riot realizes they're not going to be the backup and be able to acquire Bitfarms. And so Bitfarms is probably going to be able to stand on its own. We've also seen a lot of other Bitcoin mining companies acquiring smaller Bitcoin miners, and Riot has not been able to do that. And so that's actually a positive as well for Bitfarms. So I'm still bullish on both of these companies, Riot and Bitfarms. How high it's going to go, I don't know. But I also think that there is going to be a shift from Bitcoin to the Bitcoin infrastructure plays. Because again, Bitcoin treasury companies like MicroStrategy, they don't really make any money from the Bitcoin. So it's not really investable. They're only counting on the price of Bitcoin to go up. But at the end stages of a bull market, that's no longer a viable investment thesis. And so I think that we're going to see exiting from Bitcoin, exiting from these Bitcoin treasury companies at some point, and they're probably going to move into the infrastructure plays like the Bitcoin mining companies, maybe not, but also Ethereum. And that brings us to the Ethereum part of this video, where Bit Digital, which just literally changed their whole business model from Bitcoin mining to Ethereum strategy company. And obviously with Ethereum, you can make money, right? Through staking. So you're earning a yield no matter what. MicroStrategy, no money from their Bitcoin. Bit Digital and all these Ethereum focused companies, money for their Ethereum, right? And so now we're hearing that Bit Digital announced that its wholly owned subsidiary for high performance compute called White Fiber has publicly filed for IPO. The number of shares to be offered and the price range have yet to be determined, but the IPO is subject to market and other conditions. White Fiber intends to list on ordinary shares on the NASDAQ under the symbol Wi-Fi. B. Riley's, that's a creditor, and Needham and Company are acting as the joint book running managers for the proposed offering. And so we'll see kind of how this plays out, but that's very interesting as well. HPC, high performance compute, obviously AI capabilities, and they're starting a subsidiary. So they own it, and this other company is also going to be publicly traded. It's going to be very interesting to see how that plays out, and also how this impacts the Bit Digital price. Meanwhile, we're now seeing a 99% chance of Bitcoin dominance peaking if Ethereum surge continues. And basically everything that we've covered in this video tells me that Ethereum surge is going to continue from the banks. Guys, think about this, right? The banks are reporting that they're borrowing hundreds of billions of dollars just to stay in operation for 1 quarter, 3 months, right? That's almost 100 billion a month. Right? Maybe a little bit less, 80 billion a month. For what? A bank? 80 billion a month? And so think about this, right? What is the competition to the banks now? It's DeFi. And so as the banks continue to fail, more and more is going to be moving into DeFi. As the banks realize that the banking industry is slowly failing, right? Because remember, this is not going to be an overnight thing. It's going to be a long transition, a long, slow gone. I mean, think about Sears, right? Think about I went into a Macy's the other day. I'm like, wow, this Macy's looks like it's from the 60s, right? And Sears, nobody shopped at Sears for years. And it took years for them to go to basically nothing, right? You see the same thing happening with malls now. More and more malls you go into, there's more empty spaces. I mean, I went into a mall a few months ago and there was like 2 stores open in the whole mall. Everything else there was nothing left. And so the mall staying open with 2 stores, that doesn't make any sense. But again, these things don't happen overnight. They're long, slow, progressive things. And we're starting to see that transition occurring into Ethereum. And so a crypto analyst says that Bitcoin's market dominance has reached the peak if the price of Ethereum continues an upward trend, saying if Ethereum breaks bullish and remains bullish against Bitcoin, there's a 99% chance Bitcoin dominance has topped. It's basically impossible for dominance to push higher if Ethereum continues higher against Bitcoin. And again, Ethereum hasn't even reached all-time record highs and is at almost cycle lows still, basically. Especially when you compare it to Bitcoin. Bitcoin has done an 8x from 15,500 all the way to 120,000. Ethereum hasn't even reached its all-time record high, right, of about $4,500, $5,000. And so the likelihood we're going to see Ethereum outperform Bitcoin going forward in this cycle, it should be very clear. There's a lot of people who say, no, Cryptoviser, no. It's like, okay, you can disagree. That's fine. We're going to win here. We're going to win. And how do I know we're going to win? It's, well, the companies are no longer interested in Bitcoin. They're interested in Ethereum. And not just the companies, But the billionaires, Peter Thiel-backed entities acquired 9.1% stake in Ethereum treasury firm BitMine Immersion Technologies, obviously led by Tom Lee. And so funds and entities affiliated with the billionaire investor now own more than 5 million shares in the company of BitMine. The New York Stock Exchange listed BitMine Immersion Technologies said that it holds nearly $500 million worth of Ethereum. The company pivoted from operating primarily as a Bitcoin miner to an Ethereum treasury company, mirroring the business model pioneered by Michael Saylor. So that's BitMine and BitDigital both went from Bitcoin mining to Ethereum strategy overnight at this point in the cycle. And you're more bullish on Bitcoin than Ethereum? Okay. Anyway, the number of companies pursuing a strategy of acquiring large crypto companies, whether Bitcoin, Ethereum, Solana, or XRP, has been accelerating at an unprecedented rate. And BitMine adopted their treasury strategy, pledging to stockpile Ethereum. And so the fact that Peter Thiel is investing in an Ethereum treasury company, it's not like guaranteeing the success. But again, I want to be investing where the billionaires are investing. And the fact that I could have invested or may have invested in this company before Peter Thiel, again, this is about front-running the banks, front-running the billionaires, front-running the big money. And there's very few opportunities to actually be able to do this in the markets. Meanwhile, SharpLink adds another $225 million in Ethereum to the Ethereum treasury. And so now SharpLink has over 280,000 Ethereum worth almost $1 billion. And if you go to Strategic ETH Reserves, you can now see that SharpLink has now overtaken the Ethereum Foundation. They have more ETH than the Ethereum Foundation, and BitMine is not so far behind. So yeah, there's a lot going on here, guys. There's a lot of changes happening in the market, and there's a lot of people who are not going to, they're not going to make it, right? They're not focusing on what the market is telling us. It's not about what I want. It's not about what you want. It's about what the market is telling you and what the market wants. Jerome Powell could be fired tomorrow, and the market could crater. Jerome Powell could be fired, they put somebody else in, the market could crater. They could lower rates, the market could crater. We don't know exactly what is going to happen. And we don't know how it's going to happen. And we don't know on what timeline. What we do know is historical context of these markets and where we are in the cycle and these final pumps of liquidity into the market. This is not going to last that long. Could last 3 months, 6 months. That's still relatively not that long. But we're already up 500% in some of these stocks. And these stocks are performing better than many cryptos. But there's a lot of people who are just waiting by on the sidelines saying, no, Cryptoviser, I'm going to wait until Cardano pumps because it is going to get to all-time highs this cycle. And it's like, okay, but it hasn't just yet. And the technological innovation, the interest from institutions and billionaires is not there. Even SWI, right? Everybody's talking about SWI. There's one billionaire who's talking about SWI. Why do you think there's only one? Because you're the exit liquidity for them. Hyperliquid, same thing. Stellar, same thing. I'm going to hearing a lot about Stellar. Stellar this, Stellar that. Guys, Stellar is a stable coin transactor. The XLM coin is very similar to XRP. No usage in the network. Stellar Development Foundation doesn't even talk about XLM anymore. The same way Ripple doesn't talk about how XRP is used in their products, right? And so this cycle is not the same as the previous cycles. No matter how you look at it, it's different. As every cycle is going to be slightly different, but the trends are the same. Going back to this tweet about people getting priced out, they're chasing meme coins. And this for me was also kind of a wake-up call because we've talked about meme coins and the fact that Solana was the meme coin ecosystem. This is the only thing that Solana brought to the market. But why do people still like Solana? Well, it's because that's where retail is at. Retail is in this, we can't afford Bitcoin, we can't afford Ethereum. These smaller coins are going to pump the most. And that is true. Like when you think about the percentage gains, the smaller market cap coins, because they don't have a lot of volume and they don't have a lot of float, these smaller market cap coins have the potential to move higher more rapidly. But they also have a lot less liquidity. So when people start selling, they go right back down very rapidly. That's why you see pump and dumps. But in these big major coins, you're not going to see that as much. And so, yeah, maybe Bitcoin's not going to come down substantially or stay down substantially for a long period of time. But to think that it's going to stay above $100,000 when this is all just being elevated by effectively, these companies buying Bitcoin with debt. And by the way, if the interest rates go lower, people may not want to utilize debt to buy Bitcoin, right? They may want to utilize debt to buy other things. It could happen. I mean, people said that it wasn't going to happen in the real estate industry. And what do you see in the real estate industry? Ton of homes going back on the market now. A ton of homes on the market for multiple months, some even over a year, and they're not even getting one offer, and they're not lowering the price. So it's like almost everybody's stuck, right, in positions, whether it's in crypto, whether it's in stocks, whether it's in real estate, cars, right? People were buying cars for $200,000 just a few years ago, and now those cars are worth $80,000, maybe $60,000 new. But now you got a used vehicle that they paid $200,000 on. They're definitely underwater, right? So it's pretty much the whole economy. And this is why I think that the administration is pushing this get rid of Jerome Powell or he needs to lower rates immediately kind of conversation, because this is going to be one of the only ways that the market can get liquidity or liquefied. Because if it doesn't get liquefied, I mean, think about how most people are and companies are struggling. I mean, we're seeing companies like Microsoft laying off literally tens of thousands of employees. We just heard about Amazon. 75% of their warehouses are being managed by robots. Like, this is going to have impact on the market and on people's lives. And if they don't lower rates and ease the economy a little bit by injecting liquidity, I mean, effectively, that's what it's about. And that's what people remember from the president, from the previous cycle. And if they don't get this done, if they don't get the rates lowered and the central bank to say that they're going to ease up, we are definitely headed for much lower prices across the board, not just in crypto, in stocks, in bonds, in homes, in everything. I mean, guys, just a few years ago, people were buying watches for like $2 million, and now those same watches, maybe 100,000, right? It's still a lot, but it's a big drop. And so I think at some, like, regardless, right, either the Federal Reserve is going to lower rates or we're going to get a new chairman. We're going to get a new chairman either way at some point, but this could push the markets much higher. But there's going to be a fight. There's going to be a fight with Congress, because Congress is going to say you can't do this, and there's going to be a long, prolonged battle back and forth. And so that uncertainty could also push the markets lower. And so in the uncertainty, especially around bank uncertainty, which we already are seeing, the banks have to borrow $200 billion just to stay afloat. That should tell you where we are, because the banks make money by printing more money, right? Because when they issue you debt, that's printing money. They're issuing you debt they don't have, right? They're issuing you money they don't have. They're using it from the other people who deposited money at the bank. And so if they can't even afford to stay operating, what do you think the system is under immense pressure? And so if they don't lower rates or they don't fire the Fed, and guys, the market will send a signal. And the more the market sends the signal, the more bullish I'm going to get. But during that signal sending, right, meaning, let's say they don't cut rates and they don't fire the Fed, or they fire the Federal Reserve and he fights and says, I'm not leaving, whatever, right? Or even if he resigns, just the uncertainty could push the market down substantially, right? Or it could go much higher because people are excited and know what's coming. But either way, we know what's coming, and that's lower rates. Whether the Fed is fired or not, whether they lower rates now or not, by the middle of 2026, we're going to be in a completely different situation. And I think they're going to be lowering substantially by that point, either by already doing it or in the process, they will be of lowering rates. But the point here is that people are moving out of the banks, they're moving out of the dollar. The companies are doing this too because they want to be in a safe haven asset if this whole financial system either collapses or goes through a very rough period. And it looks like everything is kind of setting up for that. And so we want to be in before these things occur. We see that they're occurring. We see the banks are starting to waver. We're seeing that retail is being priced out. We see the banks are saying they're going to be involved in crypto, right? Just a month ago, I posted the video on my channel, Citibank Eyes Internet Computer, and people are like, well, I don't really think Citibank would send their employees there. I don't really think they're that involved. No, they are that involved. They are that involved. And so where do you want to be? Bitcoin is not in competition with the banks. Ethereum is direct competition to the banks. And so if the banks are not doing well, or the banks fail, or they go through an issue because the Federal Reserve is not lowering rates, what's the hedge against that? Ethereum, DeFi. At least that's my opinion. I want to know what you guys think down below in the comments. While you're down there, don't forget to give this video a free thumbs up. We got a lot of people who watch and are not subscribed, so make sure you are subscribed by hitting the subscribe button. And I'll see you guys on the next video. Invest responsibly, do your own research, and crypto on.